Hi, this is Ann Brewer with First Choice Realty Solutions, and I have Ray Alkalai here. Ray is the founder of Alkalai Financial Group, a firm dedicated to providing innovative insurance and financial services with a focus on advanced strategies tailored for everyday individuals. Ray and his team assist clients in creating personal pensions and preparing for a secure retirement. Their unique approach emphasizes wealth distribution strategies that offer tax-exempt cash flow, ensuring clients can plan for retirement with confidence and dependable lifetime income. Wow, that's a lot of information.
That is a lot of information.
And it sounds amazing, so I am excited to learn more about it. Ray, tell us a little bit about your background.
So my background comes from the business management. My family had a business years and years ago, and 20 years ago approximately, I decided that I wanted to work in the financial world because I felt that there was opportunity there to help people with all kinds of income related issues that weren't dealt with for the average American.
Yeah, and that's a good point. I see it all the time. Ray, what are some of the most common financial challenges that seniors face when planning for retirement or downsizing?
So what I find is that most Americans spend most of their life saving. They get to retirement age, and then they either have some money and they don't know how to deal with that because they need to now have income. So I always tell people, you don't need money to retire, you need income. And how do you turn your savings into a guaranteed income flow, quote unquote, the equivalent of a pension, what we used to have in the past? Most Americans don't have that. So how do you turn that savings into an income stream that you can never outlive? And 70% of the population we know will need some sort of long-term care at some point. How do you turn those income dollars into long-term care dollars, either efficiently, multiple of it, or tax efficient as well? And that's what we do primarily.
Okay, well, excited to hear more about that. So, what investment strategies or financial tools do you recommend for seniors who may be looking to maximize the proceeds from selling a home?
So depending on what they're trying to achieve, again, going back to the income, they're trying to sell a home, they're downsizing, there's money left over, it's sitting in an account. They do a calculation and they think, okay, we can use this money to live off of, which is great. However, is it truly guaranteed? Is it still growing? And the goal is to get that money either growing or having a multiple value for that same dollar that gives you long-term care benefits. So some people have just in case money. They sell their $500,000 home, move into a $300,000 townhome, and now they've got $200,000 sitting there just in case they need it. What if that $200,000 could now be worth $400,000, $500,000, $600,000 for long-term care benefits? And that's what we do.
Okay. So, can you expand any more on that?
So the only people that can guarantee anything or I shouldn't say people, the only companies that can guarantee anything in our economy, our American economy, are insurance companies.
Okay.
So insurance companies primarily hold the stick from both ends, I say. They sell life insurance and they sell annuities. At some point they realize there's a long-term care, let's call it revolution coming, because more seniors are turning 65. So they needed to figure out a way to create long-term care benefits from those dollars. And the only way you can do that is by what we call mortality credits. And that's a complicated issue for most, but the bottom line is they can actuarially calculate what the value of your life is in order to give you a better return for long-term care dollars. Now, what most people have a problem with is when you say long-term care, they're afraid of losing that money. What if I lose that money? You can't lose the money, number one. And this is not a use it or lose it long-term care insurance policy like we had in the past. In the past, you spent like car insurance. And if you didn't use it, you passed away, you lost that cash. What I'm talking about is you put money somewhere, it has a value of three times its value for long-term care purposes. But while it's sitting wherever it's sitting, it is growing. And if you pass away without using it, that money goes to beneficiaries, family, kids, church, everybody has where they want to put their money. So that's
Right.
more of what I'm talking about.
Well, thank you. I appreciate that. So, can you explain the tax implications seniors should consider when selling a home and how your services could help them navigate that?
So in my case, once they sell a home, most people don't have a tax situation. But the value of the home has gone up over the years. Usually, historically, most people do not have that problem. Some will, because there's basis and all these calculations that have to come into play, but most people don't have that issue. So now that they have that amount of money, the government, in its wisdom, most of the time they're not very wise, but this is one thing that they did correctly. They created the Pension Protection Act. So you can put $1 into a long-term care solution that when you use it for a long-term care solution, it is not taxable. So let's say you had $100 in an account that has a long-term care benefit of $300. That $300 is not taxable for long-term care purposes.
Okay.
Right? So if you had to use that $100 for long-term care, you would run out of money really quick.
Mm-hmm.
But at $300, you have more money that is non-taxable.
Well, that's a great tool. So, what advice would you give to seniors regarding estate planning, especially for those who want to ensure that their real estate assets are managed according to their wishes?
So I sometimes suggest to people, depending on, again, situation and how much money they have and where it is, I'm a huge believer that if you have a house with equity, but you have no savings, a reverse mortgage may be a good idea. Sometimes it isn't.
Mm-hmm.
I don't deal in the reverse mortgage. I have partners that do that. However, sometimes the equity in your house may be the solution you're looking for. Again, we have to do the math to figure that out. Most seniors are not looking for more payments. So a reverse mortgage may come handy, depending on their health, what they're trying to achieve. Are they trying to stay in the house for as long as they want? Do they love their house? Some people don't love their house. They may want to change their house. Maybe they want to sell their house and then move to an apartment and pay rent. How do you guarantee that they don't have to make that rent payment? All those calculations have to happen.
Well, and that's a great point. I mean, we have clients who understandably either own their home outright or have a very low payment. And, you know, if they have a need to move, but they're concerned about that payment, you're saying you can help them manage through that?
You can calculate, depending on what the amounts are, you can calculate a guaranteed, I just did this for somebody recently, and guaranteed their $1,200 monthly co-op bill for as long as she lives.
Okay, wow. That gives a lot of peace of mind for your client.
Right. So every month she gets the check or gets it into her bank account, and every month that $1,200 goes to the rent building. It's really more of a co-op in her case.
Okay.
But it could be rent.
Well, awesome. So what do you think is the most important thing that seniors should know about, with managing their finances during retirement?
I think most seniors are, and I don't mean this in a bad way, but it's because of the world that we live in, are extremely skeptical of not believing that they just didn't. How is it possible they didn't know? And I run into this more often than not, that most seniors, and when I say most, I'm talking 70% of the population, usually doesn't know that there are solutions out there that could make their life so much better. Because once you alleviate yourself from the fear of running out of money, you become healthier because you don't have that stress anymore.
Yeah.
So my point is, you should find somebody that can help you guarantee the outcome that you're looking for, and find out, first of all, if the math actually makes sense. But you have to get over the fear of asking the question.
Never hurts to ask a question and to get information, right?
Correct.
And what I find is, like we're doing today, we ask questions and go through conversation, and you build that level of trust and understanding. It kind of leads to the next stage, right?
Our system is designed around a progressive tax code.
Yeah.
So there's different levels of tax code, different levels of income. Depending on how much you have, when you start taking money out, when you're retired, if you know how to use the tax code to your benefit, you can take money out up to each level and limiting the amount of exposure you have to taxes. I see most people don't do that calculation because they assume they'll just take what they need. Sometimes you can move money from completely taxable to never taxable. And then you alleviate that whole headache. And then you can also guarantee the outcome.
Yeah. Well, thank you for sharing that. Can you share some success stories about a senior client that you've helped where financial planning and real estate played key roles in achieving their goals?
So I have a recent, still a client at the age of 76, had just in case money. What's the just in case money? It was a CD sitting at, and this is at 76, she's now 84. What are you going to do with this money? That was just in case I need long-term care. So we took that $100,000 of CD money that at the time was getting, I think, 0.15% in the CDs. Remember 5 years ago before interest rates went up? What it did was it made that $100,000 for a 76-year-old into a $260,000 long-term care benefit. So if she needs long-term care, that $260,000 is about $4,200 a month for 60 months. If you do that same math on 100,000, how long does that last? So my point is, I've multiplied the long-term care, and the money is sitting in an account that if she passes away and doesn't use it, beneficiaries, her kids will get the money. The 100,000, not the 260.
Sure.
In her case.
Yeah. Well, I love it. I mean, that obviously gives a better financial position for her and gives her that peace of mind. So like you said, she's not worried. Is she going to be able to make it?
So alternatively, somebody that's in their 60s, early, mid 60s, late 60s, somewhere in that range, when they start having that discussion of, I'm going to retire, I'm at retirement, what if we have a long-term care situation? Depending again on situation. Again, a client that I've recently worked with, we moved $200,000 of their IRA money, which is all taxable. There's a process to it. I'm not going to get in the weeds on how it actually worked, but the bottom line is that $200,000 that they didn't need for income, right? They had enough.
Mm-hmm.
We moved it to somewhere where now they have an $89,000 a year unlimited long-term care benefit for life. So I turned $200,000 into a long-term care benefit. Now, if they pass away, the family will get somewhere in the range of $250,000 in a check from the company. So it's not an investment, but it's a hedge against the loss of assets when you have a long-term care event. So think about that, $89,000 per year. If one of them goes into long-term care, $89,000. The second one goes into long-term care, another $89,000. Doesn't take very much to get return on quote-unquote investment.
Right. Absolutely. So, well, I often hear you being called Care Funding Ray.
Care Funding Ray.
So we appreciate what you do to help out our seniors, give them that peace of mind. And anything else you would want to add today?
I would say if you have questions, if anything I've said seems crazy, it probably is to you, but it's out there and you should reach out and give me a call. I'm very happy to just have a conversation. I don't charge to have a conversation. If we need to go forward and see what we can do for you, we can talk about it at the time. Most of what I do, there is no fee to it. I come up with plans, and if people want to go forward, great. If not, that's great too.
And if I remember correctly, I remember you sharing a story with me where you were speaking in front of a group and you had brought up if any of the ladies had husbands that were veterans and considering
Yes.
VA benefits that they may not have been aware of.
Yeah, so it's interesting to me that in Minnesota, there's 84 counties. Each county has a designated individual to help people find the VA benefits they qualify for. And the VA itself cannot find the individuals that already qualify. So these people can't find the people that qualify. So my point is, I have the phone number and the way to find all of these in each county. So if anybody's interested, I have that info as well. And there's a lot of people that qualify for VA benefits, and some of these benefits are awesome. It's money in the bank that you can just get from the VA.
And these seniors absolutely should have access to that.
Absolutely. Absolutely.
Thank you for that and for helping our seniors. I've enjoyed our conversation and look forward to working together in the future, Ray.
Yeah, this has been great.
All right.
Thank you.
Thanks so much.
Thank you.